Welcome back to the podcast. I'm Anna Shaw.
And I'm Kate Wilson. On this week's episode of the podcast, I spoke to Jonathan Tanner and Gabriela Darley from Pega about Pega's new report co-written with RFi on building sustainable customer relationships. I really loved this episode. It was kind of an opportunity for me to spend a good 30 minutes talking about RFi data and how it relates back to different providers in the market, to what Pega are trying to do and how Pega are trying to help financial institutions. So we spent a lot of time talking about some of the key trends that are coming out of RFi work at the moment around loyalty and how customers are becoming more multi-banked, less loyal, the fact that you've got customers interacting with banks via mostly digital channels just don't have that same ability to build relationships that banks would have done in the past. And what Pega spoke a lot about, and what a lot of the key findings in the report come to, is the idea that having personalization and being really personalizing your messages to customers is so important at the moment. So they shared some really good advice and I think some really good ideas around how banks can really tackle that challenge. And yeah, just a lot of really great RFi data in there, of course, as well.
I think especially loyalty and just the changing way customers interact with banks and having multiple banking relationships, something that we're speaking about so much internally, and there's so much data that I'm sure the listeners will really enjoy. So let's get into the episode.
Hi everyone, welcome to the podcast. Thank you for joining me today. I have two guests. I have Jonathan Tanner and Gabriela Darley from Pega, and I'll hand over to my guests to introduce themselves. Jonathan, would you like to go first?
Sure. Yeah, thanks, Kate. My name's Jonathan Tanner. I'm the industry principal for financial services and insurance at Pega here in Asia Pacific region. Gab?
Hi, Kate. Thank you for having us on. I'm the one-to-one customer engagement specialist at Pega, and I lead the engagement with some of our major banks, financial institutions, and our enterprise clients in telco and insurance for personalization and one-to-one.
So great to have you both on the episode today. We're going to be talking about Pega's new report on building sustainable customer relationships. I read the report the other day. It has some really fascinating insights in it, leverages a lot of RFi data, which is obviously great to talk about. Let's jump in. Do you want to give us a little bit of a background to the report and to what you're doing at Pega before we start to talk about some of the key findings? Gabriela,
Sure.
why don't we start with you?
I'm happy to jump in. So for background on the report, I guess one of the things we really wanted to explore with this report, with the help of RFi, was the interplay between some of the key priorities that at the moment are quite topical for banks. Namely, obviously, each one of the banks and financial institutions in our market is looking at how they can acquire, engage, and effectively retain customers. And the environment's definitely changing. We are amidst a very low growth environment with the low interest rates and also a lot of increased competition. So we wanted to tease out how these priorities might be changing, and of course, how our organization is actually adapting to this. From a Pega perspective, obviously in the one-to-one space, we support organizations in terms of how they can deliver more relevant and contextual and personalized experiences. So this was very topical for us. It's obviously an environment where it's difficult to find growth pockets, and customer expectations are very much changing. We see a lot of fintechs out there that are challenging the traditional banking model and almost pushing banks to find a greater balance in terms of digitization and hyper-personalization. And obviously this is translating into a transformation of customer experiences.
Yeah, and I think maybe just one sort of small point to add is, one of the things we've obviously seen is that, with everything that's been going on over the last 18 months with COVID and everything else, there are some trends that we've seen, but I think what's quite interesting is almost to sort of normalize that out of the conversation, because we recognize that, banks have had a bit of a surge in the last sort of, 12 and 18 months because of all the work that they've done to support their customers through the pandemic. And, that's great to see. But I think what will be really interesting to see is whether that continues to have an impact in the sort of medium to longer term or not. And that's certainly something that we've sort of drawn to a little bit in the report as well.
Yeah, I think one of the key things that sticks with me, and obviously looking at the RFi data, the idea that loyalty is really shifting in the market. And obviously the pandemic has had an impact, but some of those key trends around loyalty, as you said, Gab, they really do predate the pandemic. There's a low rate environment, there's new fintechs, there's more competition in the market than we've ever seen before. And all of that really is having quite a big impact. In terms of that loyalty piece, and even the importance of the MFI relationship starting to change, starting to shift in the market, what do you think are the key trends that banks really need to be thinking about at the moment?
Yeah, I think one of the things I think is quite interesting here, is looking at some of the things that have emerged over the last 18 months. I mean, the four major banks in Australia in particular have had this real, competitive advantage around the fact that they've got a large branch footprint. They are well entrenched within the market. People recognize the brand. It's a very well understood brand. The challenge is that when you take that aspect away, we've seen a lot of branches being closed through the pandemic, and that's just an accelerating trend from here on in. All of a sudden, their presence in the digital world is possibly not as all pervasive as it might be in the high street. So that sort of starts to sort of put a lot of pressure on them to actually find ways of continuing to engage with both their existing customers, but also to sort of find new ones as well. And then I think the other thing is, when you're doing that in a non-personal kind of, face-to-face contact, how do you manage to maintain that really sort of personalized engagement, in the same way as you might if you were just talking to somebody across a sort of, a branch sort of telescreen. And then the sort of the other underlying point as well is that demographic trends are really, really sort of starting to play out now. The younger population in particular have absolute expectation of a very personalized experience through their digital channels, their mobile channels, or whatever else. And it's no longer acceptable for them that you cannot do everything you need to do through that particular channel. If they can't, then the likelihood is they're going to be very happy to literally jump across to the next app on their app store and start using that instead, because that's what brand is to them.
Yeah, I know we'll talk about personalization as a little bit later on in the conversation as well. I think that point around how digital impacts is a good one as well. If you don't have that same interpersonal relationship with your bank that you would have had with your banker, with your relationship manager, how do you build that in a digital world?
Yeah, I think for me, probably the interesting thing is that, we're seeing that churn in our industry is at an all-time high. And definitely it's notable that banks and financial institutions are really struggling with retention. But yet again, we're seeing that a lot more attention is being paid to acquisition. And it seems like banks are more interested in getting new to bank customers through the door than actually looking after their existing customers. And I think, look, it's interesting because part of the reason for this challenge, I believe, is in the limitation that many institutions face in being able to really operationalize the massive amount of data and insight that they actually sit on when it comes to existing customers. But additionally, I think a lot of it has to do with the maturity level of the Australian market when it comes to personalization across digital channels. And I know that banks like CBA have definitely been global leaders in this space, but more and more we're actually starting to see that some of their peers and even some of the tier 2 financial institutions are starting to move across that evolution and that journey to move away from the traditional segment-based campaigns and focus on that real-time hyper-personalization. Also, when it comes to financial institutions, we're seeing the thing that really struck me about the research was the fact that we're seeing heightened customer satisfaction, advocacy, and trust, as Jonathan mentioned in the beginning post-COVID. But interestingly enough, that's really not translating into retention outcomes. Instead, we're seeing that a lot of institutions, they've witnessed pronounced improvements over the last 12 months, but still we are seeing that there's a lot of challenge with churn as well.
And you have to wonder what happens once that impact of COVID on things like trust and brand, as that rolls off. And I think there's also probably a bit of a boost for the majors coming back from the Royal Commission as we start to see that leave the market and that leave customers' experience. What does that mean for especially those larger brands who have to who are experiencing a bit of a lift in their trust and their brand at the moment as well? I think the retention piece is an important one too. we see lots of acquisition offers in the market all the time. When we look at our data, and I know it's in the report as well, the idea that the existing customers get quite frustrated at the fact that they don't really feel like they're recognised, but new customers are getting all of these benefits, and why aren't I being recognised for staying loyal? Obviously, a really key challenge for banks to try and address, and a bit of a step change perhaps for them as well. How do you think banks can address that challenge or that problem? What can banks do to really make sure they are making their current customers feel valued and feel like that those customers feel wanted, I guess, as well?
Yeah, I had a very interesting example recently of this myself, actually. My main financial institution, who I won't name, but I got a letter through the mail talking about a mortgage offer. And, I'm somebody who's probably, reasonably well advanced in my career, shall we say, and I'm in a position where I've got an established family and a mortgage and a house, and my main aim at this point in time is to start thinking about retirement planning and kind of paying down my mortgage and all those sort of things. So my question is when I get an offer through the door from my bank that's talking to me about signing up for a fixed rate mortgage, and they'll give me all of these various incentives, even though I've got an offset account that's got a fairly significant amount of cash in it, I'm sitting there going, why would you offer that to me? It makes no, if you think about my time of life and where I'm at in my journey with my bank, it would make absolutely no sense at all. And when I read it, actually, to be perfectly honest with you, I looked at it and thought, you really don't understand me very well if this is the best offer you're going to put in front of me. And, if they'd really thought about the sort of incentives that would make me think about deepening my relationship with them or taking out new products, you would have started thinking about, investment products or different sort of things structured for that time in life. And, I think this is the problem at the moment, is that a lot of the organizations really just focus on, very segmented views that are very product aligned. So, if you're taking out a mortgage, they'll give you some kind of sign-on bonus for taking out a mortgage. That's very popular in the market at the moment. Or some such thing. But actually looking at an existing customer who's been with you for 5 or 10 years and going, what's the best thing I can do for that customer to make sure they recognize that we really do genuinely value their business? And that's more than just sending them a letter saying we're here to help, right? It's actually about thinking very proactively about how do we support you as a customer going forward so that you continue to see us as an organization that you want to do your business with, right?
I think Jonathan has hit the nail on the head there. And for me, it's about how organizations can put the customer first, both when it comes to organizational culture and technology. I think culture is really important because I think if you look at banks in Australia, organizationally, a lot of them are still very siloed when it comes to lines of business, product, channel, even technology. And this needs to shift if we are going to put the customer first and prioritize building stronger customer lifetime value, deeper share of wallet, and putting the customer first. There needs to be centralized ownership of that relationship with the customer, and of course, appropriate governance structure to actually support this. And from a technology perspective, I did mention in the beginning sort of that traditional old way of spray and pray campaign segmentation approach. We need to move beyond that because that's really based around the notion of how can I sell the customer more products. We need to actually look at the relationship with the customer in its entirety across all of our products, all of our brands, all of our channels even, and start that engagement with putting the customer first and what's important for them. And I think in today's environment, you just can't overstate the importance of really having empathy lead your approach when it comes down to customer engagement. We have to focus on customer outcomes, but we're all in the business of running organizations that have KPIs. So it's important to be able to balance that with business priorities as well. And lastly, a lot of organizations are quite hamstrung by the fact that the logic in their engagement strategies have to be rebuilt in every single channel. So being able to have that channelless engagement, if you couple that together with putting the customer first, that's extremely powerful. It can really help drive better outcomes.
Yeah, channels, something I'd like to talk about a little bit more. You've both mentioned the role of digital, Jonathan, the role that digital's played in sort of declining customer loyalty, and Gab, the role that digital can play in really helping customers as well. What I'd be keen to understand is what you think what role digital can play in creating really positive customer interactions and experiences, and how do banks need to be thinking about the interactions that they have via digital channels, but also that omni-channel balance, which is obviously very, very tricky to get right for banks.
Yeah, look, I Absolutely. I think, and we often talk about this sort of this personalized experience, and I think that the risk can always be that people or organizations think that in order to do this they really have to have everything in place before they can start to make an impact, whereas we really don't see it that way. We think that it's something you can build over time. You can add increasing levels of personalization, even if it's just at the initial stage of just sort of having specific offers placed that really are more relevant to you or things like that, but you can sort of build that over time. But the key point as well is it's not, and Gab sort of touched on this in her last point, was it's not actually just about sales, right? You've got to think more broadly around the customer. You've got to think about service. You've got to think about empathy. You've got to think about, and it's got to be incredibly contextual as well when a customer's coming to you from a digital channel, because how you interacted with them yesterday may be completely different today, because something's happened in their life. They've had some kind of event, and they are in a very different state of mind than they were when they last interacted with you. And understanding that and being able to react in the moment is actually really important, because it may be that you can end up destroying a relationship very quickly if you don't understand that and understand how to sort of deal with that very effectively. I had a really interesting experience yesterday, which is something very front of mind at the moment, which is I've had my COVID vaccines, and I'd had my second vaccine a couple of weeks ago, and for some reason the immunization register hadn't been updated. So I phoned the place where I'd had my vaccine, and they said, "Oh, have you phoned the immunisation register?" And I said, "Well, no, I didn't know I had to." So I then phoned them up, and they said, "Oh, have you phoned the person who gave you the other jab?" And at this point, you can feel my temperature starting to rise a little bit. And actually, literally, as I was giving my poor old wife the sort of, the benefit of my opinion on all these people downstairs in a slightly heated fashion, my phone rang, and it was actually the nurse from the clinic where I'd had my jab saying, "Oh, I'm really sorry. I've just realised we hadn't updated the register. I've sorted that out for you. If you go on your app now, you'll see it's all updated." So I went in, and there it was. And all of a sudden, my entire attitude towards them as an organisation just completely flipped in a second, right? And that's, I think, where it becomes really important, is knowing in the moment what it is that your customer wants is just so critical, right? So critical.
Absolutely. Couldn't agree more, Jonathan. And I think for me, the way I think about digital channels is they're the fuel of personalization. There's so much rich insight, which when we combine, not in isolation, but when we actually combine that with what we already know about the individual as an organization, this can be very powerful to support hyper-personalized experiences. And I really like a quote by Chris de Bruin from Westpac. He effectively said, "It's not the digital banking off to the side, it's banking as digital." To me, it's really important that we don't make the mistake of thinking about digital channels in isolation, because just simply solving for the experience there does not mean contextual relevant conversations with customers. It's really important that we actually can be geared up to deliver these connected channel-less experiences, as was in your example, Jonathan. You flipped from the call center and from agents to actually receiving updated information on the app. Building that strong connection between physical and digital channels is extremely important.
Yeah, that frustration where you're seeing the channels all working independently of each other rather than working together to support. I'm sure everyone has had that experience. I've also had an experience recently where trying to do something via a digital channel and being passed off to a physical channel, but with no interconnection between the two. And in the current environment as well, there's, I'm sure, lots of people not wanting to go to branches, people expecting digital to do a lot more for them as well. So really, really great points, really interesting insights on the role of digital. The other thing I want to talk about, going into a bit more detail around that personalization, hyper-personalization, one of the things I found really interesting in the reports, one of the key findings, was that at the moment, a lot of customer engagement is really reactive rather than proactive. And that really struck a chord with me, both as someone who has a lot of research in this sector, but also obviously as a customer of a bank. What can banks do to make sure that they are preempting customer needs to a greater extent, and that they're talking to customers in those key moments and avoiding those frustrating experiences?
I think something that's always really interesting to me in this particular topic is that, banks have so much information on us as individuals. They have this huge amounts of information. And they struggle to use that information. Not always, but they do often struggle to really use that information. And when you look at the sort of just the basic information you have as a result of your financial statement and the things you've been doing, there is enough information there for a bank to be able to determine at any given point in time, broadly speaking, probably what's going on in your life. If you're all of a sudden starting to see an increase in deposits and savings, then, maybe this person's starting to think about buying a house. Or, if we've seen a reduction in their salary payments coming in, does that indicate they're under a little bit of financial stress and we need to have a conversation with them about some of our hardship capabilities? So that information is actually something that should be, pretty easily accessible and readily available. And therefore, for most customers would believe that to be the case. I think a lot of customers now are way more sort of data savvy than they used to be. They have a pretty good understanding of what information people hold about, organizations hold about them as people. And therefore, you can understand people's frustration that basically says, well, you knew this about me. And the answer is, well, actually, they didn't. They had the data, but they didn't know it. And so taking that information, but actually being able to use it in the moment, use it to build your engagement strategy with the customer is something that we see as being absolutely central to the way engagement has to work going forward. And that point around hyper-personalization is really just, taking that and taking it to the next level where you can really think about what it is that the customer may need at every given point in time and continue to learn and build those strategies as you go forward.
Yeah, and I have to say, I'm really surprised at how slow, something like open banking, as an example, has actually taken off in Australia. And I think the key reason for that is the fact that a lot of banks can't operationalize their own data that they're sitting on, Jonathan, as you said. I think there's a big element there of being able to execute on that information to deliver personalized and relevant experiences. And once we can do that with the data that we're sitting on, then we can get really sophisticated about utilizing other financial institution data, or even, things like behavioral information that we're getting from streaming data, data sets and so on. But ultimately, if you're able to constantly monitor the customer's context and be aware of how the customer's needs are changing as they interact with you, there's so much powerful insight there in being able to personalize and become and stay relevant, of course, to that individual's context as it changes. And I think from a customer's perspective, for me, it's really important that an institution engages with me on my own terms. So it's not about pushing me, irrelevant offers in the wrong channels, but it's about listening. What are the clues that I'm leaving you when I'm, reading particular articles on your website, or opening the email, or not clicking on certain links that you've put in front of me? It's actually being able to adapt to that, listen, and personalize the experiences.
I think your point on open banking is a really interesting one, Gabriela, because one of the things having worked for banks previously, one of the things I always noticed was it never felt like there was the level of impetus behind it that you'd maybe seen in some of the European markets, for instance. And there's like the conspiracy theorists and all of us looks at it and says, well, is it really in the big banks' interest to move forward with open banking at pace? Because in truth, it opens up the doors for probably even more customer churn and so on and so forth. But actually, I think almost the opposite. I think what it really does is it opens up those opportunities. We've seen some great examples in places like the UK where the ability to really leverage open banking data has meant that they can really provide some very innovative offerings, some of the banks there, to their customers. That ability to, for instance, look at the sustainability impact of your choices as a customer, for instance, or being able to take insights from multiple sort of sets of sources before you make a product decision. And it's that sort of opening up and understanding of what that information can provide to you that can really help sort of power you to that next sort of step change in the way that you engage with your customers.
I think the point that you make as well, that customers have an expectation that the data that they're already providing to banks is going to be used, is a good one as well. And I know everyone's had that experience of being asked for a piece of information that they think they've already provided, and that, I guess, that does point to really the challenge for banks to make sure that they're not just collecting that data but then using it effectively. And open banking obviously helps with that, but is there anything else you can provide in terms of insight around how banks really should be using the data that they have already, or perhaps some good best practice examples of what you've seen so far?
I think from my perspective, some of the good examples are where you think about some of the leaders in the market. What are they doing right? And one of the points that sticks with me is they've been able to really centralize the way that they operationalize data that they hold on their customers through centralized decisioning. And when we say centralized, we mean it sits in the center of all your channels. It's cross-channel, channel-less, so that really your organization is able to appear as one voice when it comes to the entire customer experience. And that's optimized across the high-level corporate objectives. So some of the principles that I think of that are applied by leaders in one-to-one engagement are, of course, remaining customer first. So I know a lot of organizations struggle with being able to operationalize data on an individual customer basis, but that's extremely important because you have to be able to execute data-driven insight on a one-to-one customer basis. And then secondly, remaining outcome focused. I mean, we talked a little bit about balancing the customer outcomes across sales, retention, service. You have to ensure that you're always relevant to what's important for your customer. And here, technologies such as artificial intelligence, machine learning, predictive and adaptive analytics that a lot of the banks are sitting on can be very, very helpful. And timing, I think, is really important. Being able to execute strategies in the moment as a customer engages is extremely important, because it really comes down to personalizing when the customer is ready and putting an offer or proposition in front of them when they're ready to engage, not when it's irrelevant. And last but not least, I think arbitration at an enterprise level is really important. So being able to really utilize responsible AI and machine learning that's really compliant and has the ability of operationalizing the predictive and adaptive models a lot of organizations are sitting on to really predict the most relevant action, message, or offer. And if you can do this in the moment, it's extremely powerful, because today in our old campaign world, it can take 4 to 8 weeks to get a proposition out the door. That's not viable, and it doesn't really support good outcomes for customers and the banks themselves.
And then I guess the final question I have around hyper-personalization and delivering personalized messages to customers, or personalized experiences to customers. How do you get the balance right to make sure that customers don't feel like it's too personalized? I think we've all heard that, that idea of it's a bit creepy that my bank would know that I'm about to buy a house. Or, hopefully customers are open to getting the right see the utility in getting the right messages at the right times. But how do you avoid that looking like you know too much about customers, especially when there is so much concern and anxiety around data security?
Yeah, look, I think it's a really interesting point, and I think my observation here is it's quite contextual. Sometimes you're actually really happy for it to be very personalized. Like if I'm actually in a direct interaction with you, the fact that you can bring data into play to really help me get to the right outcome quicker is fantastic, and I'm rarely gonna be sort of too unhappy about that. I think where people start to get a bit twitchy is when they see information being pulled from other sources, not information that's been provided, and then use that to sort of put something in front of you where you look and go, well, that's a little bit spooky. How did that come about? And I think you can tune that over time. Right? I think it's important to be able to sort of differentiate between a sort of an initial engagement through to a more contextual, deeper engagement that you might have with the customer. And I think that's something that we would see as being an important part of designing how an engagement strategy would actually play out and how it would work. I mean, it never ceases to make I think I get the point. I mean, we always find it a bit creepy when you're on a website and all of a sudden ads are coming up for things that you're sitting there thinking, how did he know that about me? And it does. But I think people are becoming more used to that now. I'm not sure it's something that they necessarily feel as bothered about as they probably used to.
That idea that my phone is listening to me, but I quite like that. I quite like all the targeted ads.
So do I.
Yeah, I think there must be a balance. I agree with you both in terms of being focused on the customer outcomes. I think that in today's world, we all know that organizations leverage a lot of insights that they know about us, and there's an expectation that they'll be doing that almost. but it's about how do they leverage that information to actually ensure that they get us to our outcome quicker in a more seamless way, rather than actually, feeling really creeped out by the fact that you're getting ads on Facebook for merchandise that you were looking at a second ago on Google. And again, I think a centralized and holistic approach can really help with that, because it's about balancing all the different data sources that you have about an individual, and being able to bring that in as part of a holistic engagement strategy that really helps you zero in on what's important to this individual right now as they're engaging with me.
And being transparent as well, with the customer, is that if they want to know how it is that we know that about them, then, be open to providing that information to them. Right? I mean, there's no secrets to be hidden about that.
Absolutely. And I think these days there's technology also that can really assist with that. When we think about a centralized decisioning, that if you have predictive and adaptive analytics, or even machine learning that can help you arbitrate between lines of business and determine how a customer's changing context is adapting, and bring in that balance of customer outcomes with business KPIs, that can really help staying relevant within guardrails, I think, as well.
I think all of our research around open banking really points to the fact that customers, if you ask them directly, are a bit nervous about sort of data sharing, but where they see the utility and the benefit to them, it changes their mind. And if you can provide that transparency around, this is what we know, this is where it's stored, it's all secure, it's all safe, that really helps to allay those customer concerns as well. Well, Jonathan, Gabriela, thank you so much for your time today. I've really enjoyed this discussion. I love talking about loyalty and customers and how to meet those customer needs. So really great insights and such a great conversation. Where can our listeners go to find out more about Pega and to read the report?
Yeah, sure. I mean, obviously our website is the first point, but we interact with people through all the normal channels as well. So it'll be available through all of those.
Thank you so much for your time today.
Thank you.
Thank you.
Thanks for listening to this episode of the Global Digital Banker podcast. You can find us on iTunes, Spotify, and Podbean.